December 24th, 2019, and it's 9:35 a.m. in London when we're doing this market update, as we should do at the time of the day. This will be the last update for the year. I'll be back after that on January 2nd for the next market update. That will be Thursday next week. As you know, most of Europe is off today, and even here in London, actually, on the way into the city of London, it was very empty today. So there's not a lot of activity, and we can also see it in the charts. There's not huge changes in most markets. Again, in fact, look at that now, and I'll show you. So have a bit of action. Actually, have no action. Actually, yeah, a bit of action in gold, up 40 basis points, or almost $6 per contract. So that one is up a bit, but everything else is a bit quiet right now, which makes perfect sense. You know, people just home relaxing, right? So what can we say about the euro, right? Let's take a look at the euro. Now, the market overall is trading sideways because, you know, if you look at the price here, the price is exactly the same though it was in 16th of October. So not much has actually happened. There's no trend right now in this market. It's not like the stock markets, which are just going up and up and up and up. So one needs to be a bit careful here, and the way I like to look at it is take a step back and look at the big picture. And the big picture tells me that we're trading sideways between November low and the December 12 high, and I think this will narrow down. I think we'll narrow down further, and then maybe hopefully early next year, maybe second week of January, we could potentially be looking for a break here or break to the downside. But I think realistically, we will probably lower this range. Now, if you still want to, try to scalp and trade things, then I'll give you the levels. Nothing I trade with personally because it's way too short term, but you're dealing with a little short term downtrend below 1145, and if we would revisit something like 1107, then we might go down a bit again here. It's more clear in GBP USD actually. So this is GBP USD, and this is your daily chart. So in the daily chart, you can see how we're heading into support. So it's not the best time to sell. Now, if you look at it from a short-term perspective, if I flip to a 30-minute chart, you can see that you have a decent little downtrend. And in the past, I used to focus on stuff like this and also trade it myself. And just a few days ago, I said this is the trend defining level at 131.36. Now that level is 130.87. And as you can see, we're dealing with a bit of a downtrend. And if we do swing up to 129.80, some people might sell here and then target the same low, if not maybe something like 128.78. And risk reward ratio on this one is about 1 to 1 really. So it's possible to trade this one. The reason why I don't trade this one is that it's a very high turnover, and these small levels don't necessarily hold that well. Here's something else, definitely something to keep an eye on over the next few days, because the yen and the yen pairs can have a bit of action. You can still have some movement in the yen pair and markets like that. Primarily traded in the Far East, where people don't necessarily celebrate Christmas as they do in Europe and America, North America, and even South America for that matter. So what can I say about this? Could be some interesting stuff happening here. And I think if we do go down to 108.92, then some people might buy here. Remember, the last idea I said was to buy here for this to go upwards. That would have fine. The alternative is we might take out the high, the November high of 109.72, and might go upwards. We're still dealing with what looks to be a bit of a, some people call it something different, but you still have a big head, and you got yourself a left, and you got yourself a right shoulder here. And the break to this pattern happened, depends actually, I think we'll do it like that. You can call it a triangle then if you want to call it. The price target is going to be the same, but the break happened here more or less, and you still have that target, and I think it's up here actually. Yeah, so 113.58. And if it's not an inverse in the shoulders, it's still an uptrend. What else? Well, if we look at gold, which had a bit of action, you can see that gold is moving upwards. And maybe it's like what we had in the past, maybe it's not. No one really knows. In fact, most of these breakouts from these sort of channels tend to be false. But you can see this here. This is a past example of how the market was trading sideways for a few months and then breached the upside and then never looked back. But, you could have done it like that, and you could have said here, oh, look, we have a break. But that fizzled out, right? Went up and then went down and then went upwards. So this is maybe what that is. And even here, I think you could have done it like that. Then you could have said, oh, look, breakout, didn't work out. Look, breakout, didn't work out. Look, breakout, worked out. So it's an interesting situation. I do think, though, like I said last time, yesterday, that if we go up, we might go upwards a bit. So maybe and hopefully what I would prefer, because I'm going to take time off now because of the holidays, I would prefer if the market would do like it did here. So it would be going up and then down and then up. And then it becomes more obvious to some extent. Not saying that's going to happen here, but that will be good. I think in the short term, we'll probably go upwards. And then maybe down, and then we'll do something like that. For now, my target is going to be this low here. And that is the, it's the 1458.15 level. Crude oil prices, there's not much activity here. You're dealing with this rising channel. And we're hitting to the extremes here. If you sort of ignore everything for a bit, if this is sort of the average price now, then we're starting to reach some decent overbought levels on the daily. It is possible to buy from 59.43 when that happens, with stops at 57.68 and target the upside. Alternatively, is buying at much lower levels. S&P 500, it's on fire. Markets in the 2019 been very choppy at the end of the day. I mean, obviously in hindsight, you can clearly see, oh, look, beautiful little channel, right? But what you can see here is that if you remember, the market here was very choppy in 2018 and then very bearish, and then stabilizes. Then you had a break here, but the break here, was already here. People were looking, actually, this is a breakout, didn't work out. This was an attempt to break out, did not work out, and this was also an attempt to break out, did not work out. And then on the final move, it actually worked, and we're actually at the profit target area, because you can treat this section here as an ascending triangle, and we reached that target. And this is the number one people why we're trading, or number one problem with trading is that you need to try, you need to buy on the breaker here, you need to buy on the breaker here. And then what happens here is that actually this was also an attempt almost pretty much. So you got the breakout here, 1, 2, 3. So the key point here, with a lot of people forget, is that you need to keep the risks low. And most of the time it's just like that. It's just false moves. And then whenever you get it right, you get like a home run. And that's the problem sometimes, because especially when the market's been quite choppy, as they have been now, it's difficult to hold on to position. Like, even if one would have bought down here, imagine you bought it in the dip, would you have kept it all the way up here? You would only kept it like that if you're like, it's your pension money and you want to keep the position on forever, but then you'll actually keep it on forever, which effectively means that when this whole thing collapsed here, you didn't sell. You would only start to sell when it's time to retire. In my case, 35, 40 years from now. So you get the picture, right? Everybody else, like us, for example, we did talk about buying here. We probably just would have bought here, and then when we reached the prior high, because of the experience we have from the last 1.5 years, we would have booked profits here. And then, maybe we would have get involved here. Now, though, things have changed a little bit. The markets are trending a bit more, not necessarily currency markets, which have been quite boring for quite some time, but things are starting to trend, and hopefully that can continue. Because there are sometimes, a few times, not always, but as I said it before, there's certain times when everything sort of just moves and trends, and it doesn't have to be that everything moves and trends to make money. Um, like, but when it does happen, you make very good money. That's when you start to do like 100% returns, not 100% returns on a 2 or 3 thousand pound account or 500. I'm talking about making 100% on bigger accounts, because everybody can do 100% like in 1 week or so on a $50 account or $100 account. It's when you have more money when it becomes more difficult, because mentally it's more difficult. It's a bit like demo trading, right? Demo trading is super easy because it's virtual money. Anybody can make money demo trading. It's not. And still meet people that think that, I mean, demo trading is good to learn and understand how the platform works, and learn about your trading strategy. But there's a huge difference between demo trading and real trading. And then again, there's a quite big difference when trading with a small account than a big account. Um, anyway, it's quite exciting, I think, that the markets are starting to trend, and something like the S&P 500 or the Dow Jones. Maybe Dow Jones is better. I'll show you that now. Is still guided by this very nice channel, and maybe second week of January or so, when liquidity comes back to the market, we'll have some stronger pullbacks. But I still think this could potentially be something interesting, because you see, stock markets are so bullish right now, right? If you think about it, they're so bullish, and they're telling us that the ISM indicator, which last reading was like 48 point something, 48.1, the S&P now predicts that that number is going to jump up to 56. And effectively, this printing is projecting a very, very good state of the economy. And I think that's very unlikely. We're definitely going to have the risk of a recession has declined quite substantially. Doesn't mean that it can't come back. But of course, all this money pumping by the central banks and it's helping the markets. But what's going to happen at one point is it's going to be like market thinks that, you know, ISM is going to be 58 or something, and then the number is, you know, 52. And then you have that strong correction, and then probably the fun part, the easy part, will be over, but we can still potentially be buying on dips, and hopefully we can have more trends, because that's what's important. Because 2018 and 2019, realistically, we're within a big range here. And Euro USD, yeah, if you could definitely have traded this, but it's not like a fast moving market. It's not like here in 2014 when you literally the whole thing just slid, and it was super easy to make money at that point. But yeah, things are starting to look interesting. Gold is trending as well. As you can see, you got that massive move. We still haven't reached all the targets, so it's looking interesting. It's looking good, and hopefully it will continue in the next year. Okay, let's see if you guys have any questions. Got a Merry Christmas here. What about gold? Thank you. Merry Christmas to you. So gold, I think gold, as I mentioned earlier today, is that gold will took out that trend line. I think it'll probably head to 1,500, maybe a little bit higher. And then if this is like it was last time, then yeah, we'll probably head much higher. We still have these long-term target. This is an ascending triangle pattern here. And then I have an inverse head and shoulders pattern on 1,700. So what can you do today? Like, is this the time to buy like now at 1491.41? 0.4, yeah, 41. Not necessarily. If one is not in a position, I will wait for a little pullback to 1480.35 with stops below 1458.15. That's what I will be looking at. Unless, of course, you really know what you're doing, because it seems to be like, again, if you go on the 30-minute, you can see this little uptrend, and I think we can push a little bit higher, maybe 1,500 or so. But the risk-reward ratio is really important. So the risk-reward ratio just shows how much you could lose. So for example, if I buy right now at these levels, I will have a potential loss of 2.53%. And if we hit the target, that's going to be a potential reward of 1.73%. So that gives me a risk reward ratio less of 0.75. But if I wait for a pullback to this little spot here, the stop loss goes below, and then we hit the highs, then I could make then I would make potentially 3.4%, and I would lose 1.49%, which is the big difference. And when I trade, this is what you're looking for. It's a bit like what I said with the S&P 500. You know, you imagine you would have bought a bit here, and the market went to your advantage. So you could reduce the stop loss, so you didn't actually lose any money here. Maybe you make 1%, and then here you bought a bit and it didn't go good. You lost 2%, and then you bought a bit here. It went to your favor, but at the end you didn't make any money. So you lost 1%, right? Lost one. Sorry, made one. Sorry, my memory is so bad now. Imagine you made 2 here, you lost 1 here, and you made nothing here. So you're up with 1%. And then you get this one right, and you make 5-6%. That's again risk reward ratio to some extent. The alternative here, for example, for example, with the help of the channel, which again a risk reward ratio, you get an uptrend, the market goes down to close to that channel, stop loss just below here, and then we reach the levels here, you make 2.35. So that's what you're looking for. And unfortunately, right now in gold, in the very short term, in even the 6 hours, you don't have that. But you can, if you switch to short term chart, maybe figure something out. But if you don't know what that is, then it's better you don't do it, because the more short term you are, the higher the risk. Okay, we're gonna wrap things up, guys. I want to thank you so much for watching. Please don't forget to click here and like the video. It's very straightforward. Click on this little button here. That's always helpful. And I want to wish you guys happy holiday period, or Merry Christmas as well if you celebrate that, and Happy New Year. And I'll see you guys on January 2nd. Thanks so much, and I'll see you guys very soon. Bye bye. Cheers.